Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're going to look at here is a chart of the market. This is going to be the mini S&P 500 futures contract, front month in nature, June. Looking at the last print of 1373.75, it's been a very interesting, as usual. The market's just been so extraordinarily intriguing. It just seems like almost in perpetuity. It's just wonderful. So we're getting this move. We got this huge directional move yesterday, which was great. And then here Friday, the 13th day of April, 2012, we're getting kind of a retracement, but we're going to look at a chart of the daily market in a second. You're going to see why we've had this constriction. What's happening is the our key measure of intermediate term trend following support resistance is battling our key measure of short-term trend following support resistance on the daily chart. What's more, we're having the retracement here in the S&Ps of the move yesterday. Kind of a pretty deep retracement, but if you were to plot a fib line right here, you're probably right at that key 5618 fib zone. So that resistance and support, along with the resistance of our key measure of trend following support resistance, really is leading to what you see here, which is kind of a constrictive zone. But having said that, what we're looking at here is our intraday dynamics. These are our proprietary indicators, what we use to kind of gauge where the market is likely to go. And right now it's suggesting overwhelmingly bearish, and one could argue that would have been more so earlier in the session. We're heading into the late session, and as you can see here, we're starting to get, instead of full red, 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 we're starting to get a little turn, a little divergence, a little positive divergence. Now, of course, the trend is very likely to continue to hold here. We can actually go ahead and just plot the fib we were talking about and just kind of see where we're at. We'll use the line there. So we'll just plot that there. So see here, as mentioned, we're right in the key fib 618. What's more is we actually broke below it and then got back into it, the zone right here, this band, which again is converging as mentioned as resistance. So this is more than likely onto resistance duty, but there's really not going to be a trade here, a free informational day trade. One could argue, again, probably a 2 out of 4 star, out of 5 stars to sell short the market here at 74 and go ahead and target the lows. You see there 68.25 was the low today. So go ahead and target 70 down to 68, kind of scale out there. It's probably where we're going to close, right around the lows. But the market again is turning a little bit, hence the reason for the merit of only 2 stars out of 5, maybe 2.5 stars out of 5, is the short setup. But that would be a free informational day trade. Again, 2.5 to 2 stars out of 5. That's where the intraday market is. Kind of confusing a little bit. The market is magnetized back to, it always seeks equilibrium. But actually what we're looking at here is a chart of what we're looking for actually is a chart of the daily market. The aforementioned, as you can see right there, our key measure of short-term trend following support resistance is in red, and that's right around 81, and 65 is the blue, which is for our intents and purposes. This level right here, this green, 1287 to 1300, that's going to be a pivotal point. Actually 1280, you see the swing point here, 1280 to 1300 is going to be a pivotal point if the bears can get her down there. We've not yet issued our the long-awaited add to bullish exposure. We went unofficially bullish down here at 1130. We went officially bullish up here at 1230. Up here at 1230, and then so it's about 200-point gain. We're still holding on to that, but we're wanting to actually go to add to some exposure. It looks like for now, again, we're going to wait and kind of see where the market goes, but it looks like we're probably going to wait to around 1300 before we issue that add to, maybe again 1330. That would be every 30s, 11, 12, and then 1330. Let's see what this swing point is here. So we're looking at, lo and behold, 1330. What a shock. So that's going to be kind of a key level unofficially for us, is 1330, to test that swing point. Perhaps the mother of all trend following support resistance measures here at 1287. Again, for our intents purposes, we have this blue line, so it's really going to be kind of interesting where the market is likely to head, and we're just going to seek to gauge it as we do week in and week out. And of course, our systems are going to continue to trade it week in and week out. We had mentioned actually the let's take a look at the MRSEM. That had a beautiful long setup yesterday that we mentioned. Reversed right at around 63, and it was just off to the races. Almost a $2,000 gain per contract after booking our short gains recently. We gave back some of the profits here, but it was a beautiful long yesterday, and it's still long. MRCM is still long. The let's take a look at a quick look at the sentiment. This is our free model. Again, a couple whip outs here, as you can see, but you can still trade it. And we'll just take a quick gander at how that's done. Not too bad. Not too bad. $115,000, $18,000 maximum drawdown for the account, but that's trading 5 contracts. You can just trade 1 contract if you wish. I'm going to go ahead and switch over and look at that. Excuse me. So there you go. In recent times, $600 average trade net profit. Not too bad. But over time, $115,000 has been the profit. Excuse me. What's interesting is we are seeing a particular high level of fear. We're at the 1 level. We're right at the 1 level, and the market is actually up yesterday and just marginally lower today. Well, marginally 11 points on the TF. That must be stricken from the record. Definitely not marginally, given an $1,100 drop, 1.5%. But on the daily chart, this appears to be moderate in of a drop, particularly given that we've got a 1 level in fear. So this market could very well go higher from here. And looking at the daily chart, we're going to minimize that. And it looks like, so we've looked at the intraday, we looked at the daily, looked at our official market biases where we're looking to add to exposure. We're not looking to drop our bullish exposure, particularly above 1300. Below 1280 we might on the S&Ps. So here's a nice long setup again for the EM contract. We can take a look at this. This is EMDS. Going to look at some of these key platinum models. Again, green dot. We always love to see the green dots. Each week we talk about we need to plot a green dot portfolio. EVR3 VSR, green dot. As you can see, putting up some nice winners over the last couple of days. EVR3 VSR. And MRCM PTL, green dot. R30C. Green dot, B. Now, of course, these green dots, as mentioned, means that the system is at a new equity high. Each green dot is a new equity high. That's why we go over this every week. These are platinum models that have never been offered to the public. These are the market, the models that we trade as a firm, and have never been offered to the public. Now they're offered to the public, and you can actually trade them. The R30A. Green dot right there, as you see. CBR not, still struggling a little bit. EVMCM had a bunch of trades the other day, but only about half of them, unfortunately, were winners on that day. The other half were losses. ISRD has a green dot, but just closed out, kind of had an errant long position for the ISRD. As you can see, it's just been winner after winner, winner, chicken dinner, and we closed out kind of a small little loss, exited essentially. The EVR3 green dot, beautiful, as you can see, trading at least once. That was actually a better trade than the EVR3 VSR. Quite better. Didn't have a trade the day prior, but quite a bit better. $500 per contract, so $1,000 for the 2 lot in the platinum model. ESM30, the ESM30X, again, no green dot. And the ESM30, 2 more longs. That's what's interesting. Do have a green dot in the ESM30. Beautiful, beautiful. Even though we've had a couple losses, look at that. We've had to ride down a couple losses on that. But as you can see, we're right near a green dot. But those were booked losses. And the ESM30X also going long. A few more winners right there. on the position, and the ESM 30, beautiful. So we got some long trades there. If you guys want to participate in those will be good. Should be good trades, given that we're coming off our key intermediate term measure of trend following support resistance. So that's how our models have done, as you can see. And we're going to go take a quick look at the website and hope we don't go to a blank screen. There we go. So the MSA UDT actually gained $1,600, gained $3,000 on Tuesday. I can't remember what it did Monday. I think it made a couple $100. Tuesday, $3,000. It's a $10,000 account, aggressive account. $3,000, 30% for the day, and then it actually made $1,590 yesterday. We actually don't have a snapshot of that, but it made $1,590 yesterday, 190 the day prior. It's almost 50% gain just in the last 3 days for the MSA UDT. We had been mentioning that the drawdown over the first quarter of Delta DTS and MSA UDT, two leading portfolios, if you go to the, that's why we keep up this graphic, you can see last year MSA UDT and Delta DTS, $10,000 and $15,000 portfolio, up about 400% last year. So anytime these have a drawdown, you definitely want to get involved. You want to add to exposure. If you've had to endure that drawdown of $10,000, you're going to have to obviously refund a little bit. The margin is about $3,000. And we definitely recommend doubling your exposure. That's really a great opportunity to really leverage your returns, to take advantage of drawdowns, buy low and sell high. But so that's what we had been mentioning, 100% drawdown over the last quarter, Q1. January was particularly nasty. It's usually not a great month. February is quiet. But overall, we had a $10,000 drawdown in both those portfolios. Definitely a great time to get involved. And as you can see, the start of Q2 has already been stellar, as we've got, again, a 50% gain just in the first few days. If you have any interest in trading these portfolios, you can go to the website and you can click on MSA UDT or Delta DTS. Here's the thing, Delta DTS, you're going to trade 9 models. Scroll down to the actual product, hit add to cart, and then your shopping cart's going to come up. Now, if you want to take advantage of some amazing offers, you can enter promo code VIDEO if you're watching this video, and that's already been applied, and that's going to be applied. What that's going to do is it's going to take your total for a year, 4 quarters for the next year, for the next 4 quarters, from $3,152. You're going to save $1,000, $2,200 to trade. Let's look quickly. We'll go back home right here, and we'll look. MSA UDT, $42,000. We'll say $40,000 last year, and our fee, $2,000 of that $40,000, $2,000. An amazing deal. Excuse me. You're going to save 30%. Here's what's interesting. Not only are you getting in, of course, you've missed, if you were one of the ones that didn't take advantage over the last couple of weeks as we've been asserting this, if you've been waiting, you have missed $5,000 in profits over the last 3 days. Is it too late? Of course not. 400% return just last year. For the MSA UDT, definitely never a bad time to get involved in 2 to 3 of our leading portfolios. And so not only are you going to save 30% for that year becoming a VIP member, but you're also going to save 22% on your brokerage commission. So that's our fee, $2,200 for the entire year. It's not even $200 a month to trade 6 models. If you go anywhere else to trade systems, you're going to be charged about $100 a month per system, and then so that would be 6 systems, so that would be $600 a month. Here, you're less than $200 to trade those 6 systems and get the diversification and the leveraging to make 400%. Of course, it's extremely risky. The maximum drawdown, factoring in after deducting $26, I believe, slippage and commissions, over 100%, 120%, I believe, for the MSA UDT. So it's very aggressive. If you're not comfortable with that, if you're more of a moderate trader, then you start with 20,000 instead of 10. If you're more of a conservative, not even a moderate, you start with 30,000 instead of 10. You're still going to trade the same 6 systems for the account, but obviously your drawdown of 120% goes down to 40% if you're trading a $30,000 account And so there you have it. It's 22% savings on brokerage commissions, which include strategy runner fees for the automation, near instant execution that you saw right here. This is strategy runner, and the broker will help you. Actually, the broker will take care of everything. All you have to do is click subscribe, purchase, and $2,000. You'll get a link in your welcome letter to open the auto trade account, and then the broker will contact you. You'll need to fund the account. The online application is about 5 or 10 minutes at most, and just fund the account, wire, send a check. Don't recommend a check. It's like 10 days. Wire the funds like a normal person, and you'll be up and running in 2 to 3 days at most. And you too can participate in these amazing gains that we've seen. So if you guys have any questions, go to the website, chat with support team live, or shoot us an email to admin@MiniAnalyst.com. Hope you've enjoyed the analytics, both intraday and the daily analytics, and the opportunity to get involved in such amazing opportunities for risk speculative trading by professionals with proven track records. So if you're struggling out there with your own account, why not? We'll see you next time.